Hello, this is the update for the 6th of February 2009, and we're doing this a little bit earlier than normal. Normally these videos comes out at weekends, but we have a very interesting setup that is coming into the payroll report later on this morning. Now, throughout the trading year, there's normally some very pivotal news events that shape major trends, and often we don't really know what those events were until after they've happened and the trend developed. However, on occasion, when looking at the charts, we can actually see that the market has decided that the news event is going to be pivotal. What this means for nearly every trader is that effectively we need to wait for the event to come out, and then we have to wait for the trend to decide what it wants to be, and then we need to go with that trend. Now, if we're very short-term traders, we can get involved immediately, but we have to be very nimble. If we're a little bit more strategic, then we can wait for the market to either break out of the distribution that it's in, or we can wait for confirmation on the following Monday or Tuesday, or we can look for the initial move to be false. So a thing that I might be looking for is what's called good news, bad action. So the news is bullish, the market initially goes up, but then comes straight back down again. Now, this setup coming into payroll is specific to the American stock market, the Dow Jones and the S&P. And we've mentioned this very long-standing uptrend line on the monthly chart on the Dow Jones, which began back in 1990, connecting in 1994. And if I change the chart a daily, there's been various times where the line has held. We had one day of a false break and a very swift reversal in what's called vacuum down, vacuum up behaviour. And then since then we've really flirted with this line, sometimes closing above and below. The key thing here though is that coming into the payroll report, if I put my vertical cursor on the chart and you look in the bottom left hand corner, you can see that almost the trend line, which has a value of 8,059, price actually closed at 8,063. So for all intents and purposes, what has happened is the market has closed directly on that trend line value. I've now turned my attention to the S&P on the market profile, and this is using the pit only hours, and it's taking the distribution from the low that was made back on the 21st of November. And this is where the setup that we see at this moment is the one that is telling us that this news event is pivotal and we should get a trend come off this news event. And the reason for this is twofold. The first thing is that if we look at the longest line, or what I call the control point, price closed exactly at that point. What this means is that the market is effectively balanced. It has reached or settled at the ultimate point of fair value for all of the traders that have traded since the 21st of November. What is even more significant is this little blue arrow here, and what this is the midpoint of the entire range of that distribution. And as you can see, the midpoint is at exactly the same value as the control point. This means that not only is the market settled at the ultimate point of fair value, which is control, it also means that the entire distribution is balanced. So now we know why we're ready for a trend and what are the key levels that we're really looking for post the event. The first area really is around 854.40 to 80, which is just the beginnings point of this distribution. We have an old control at around the 864 point. And in terms of being bullish, price has really got to first of all get above 875 and then start trading into the 888s. At that point you could say that it was going to come at least all the way up to the 922 point. On the downside, it's much clearer in the fact that we really don't have very many standout levels on the downside until this 806 to 807 point. If we start trading below here and then break into 798, there is effectively no support. So in terms of swiftness of trend, I would expect a downtrend to develop quicker than an uptrend. Finally, in returning to the Dow Jones on the daily chart, we have one of our proprietary divergence signals that's appeared that is RSI based. This is a relatively rare signal, and normally comes when we've been in a steep downtrend or uptrend, although this signal has appeared in sideways. The point about these divergence patterns is that they are normally either very, very good or they're very, very poor. And so what I would be looking for from a strategic point of view is a 2-day close, either above the current close today or below the current close today, to confirm the divergence having worked or having failed. So remember, if the market does go down and the lows of yesterday's pattern are taken out on a 2-day basis, it should suggest that we're in for a very strong downtrend. So in conclusion, the classic setup is the fact that price has settled at control before the event, which means that price has settled at what is the ultimate for fair value for all players, and more importantly, the midpoint of that entire distribution equals the control, so the market is perfectly balanced, which means that it's now ready to trend.